Assalamu alaikum. Welcome to the first question ever in your ATX. This question series that I've started from today is relevant for your March 2025 exam setting. Why? Because this is the last session that you are going to do your financial at 2023, that is FA23. And before I proceed with this question is from your revision kid of ATX, the Kaplan, and only the first question will be available on my YouTube channel for free. As a sample, you can go through it so you can see the way I approach towards a question, the style of my working towards a question. You can get a idea of it, and then you can decide later on whether you want to join my membership or not, because I'm offering membership on my YouTube channel now. So from question 1 onwards, the remaining questions where I'll be solving all the revision kit, the entire ATX revision kit for 2025 March will be solved, but it will not be available for free any longer. You have to join my channel to become my member on YouTube. And once you become a member, you can access the videos are there for the existing member, and whoever has not become a member yet, do join today to become a member of my channel, and then you can get all the revision kit questions there, the solutions of all the revision kit, where I'll be going step by step. I'll be breaking down the question into small pieces and will be telling you some important tips to pass ATX along with my own experience. Okay, and that's it. And then if you want, you can purchase this ATX videos where I'll be solving. If you want, you can purchase it separately from me. All you need to do is contact me on my email. You have to email me, or you can contact me on WhatsApp. The link will be given in the description below, my WhatsApp number. I will not be given by WhatsApp number, but my email will be there, so you can email me. So let's start with this question. There are total 70 questions in your revision kit for ATX, and this is the first question. This is of the latest ATX revision kit, mind you. Okay, because from March onwards, for the June session, it will change. There will be a new financial year there will be a new revision kit, so this will not be relevant then. It's only till March, and I will be finishing it by Feb. That's the plan so far, before your March exam starts. Your exam of ATX is 5th of March 2025. Before that, I'll be finishing the revision kit. So let's start with question 1. Okay, the first few questions, if you see your revision kit, focuses on taxation of individuals. This one, you see, it focuses on taxation of individuals. Okay, just a minute. There is an issue with my pen. So the matter is solved. Let's start with question number 1, Gail and Braid. Now, you will always be given the date, and you should consider this date. It's very important. Always today's date, assumption date, will be given to you in exam like this. Okay, I'm not going to go through in depth of the question. All you need to do is you need to read through this question before you attempt this question. Okay, so before you come to the solution, make sure that you yourself have read the requirements, read the exhibits. Why? Because if I come to read the exhibits and requirements, it's a waste of time. It's going to make the video very lengthy. It's going to waste a lot of time. A lot of my viewers are not going to watch this video till the end. So it's a time consuming activity. So I'm assuming you are well aware with the question, and I will quickly go through the solutions. Okay. So, and then this is the format of the question. This is a 50 marks question. Mind you, section A question with out of 50, 40 is your technical mark and 10 is your professional skill mark. So I will also tell you how to get those professional skill marks. Okay. So they will always tell you who you are. You are a manager. Okay, your manager. Okay, so the person is Gail and Braid. Braid is the father of Gail. Okay, both are your clients. They are owning some shares in a company. This is about Gail owning some shares in a company. Now, there are advised. So these are the four requirements, main requirements. This is the summary of requirements. Detail are given in exhibits later on below. You see, okay, there are four exhibits, 1, 2, 3, 4. So we'll go through the requirements first. First requirement is about corporation tax issues in relation to disposal of a building and some shares. So you're disposing a building and some shares. What is the corporation tax issue? Next, extracting for fund, bonus versus dividend. Next, consequences of non-disclosure of income. This is from your ethics. Remember, ethics always comes. And then inheritance tax consequences of lifetime gift. So you see, this is a mixture of various, it's a multi-tax question. You are not going to get just one question for 50 marks. It's not. This is ATX. You are going to get all the types of taxes, 2, 3 types of taxes in one question. If you see here, this is about ethics, inheritance, cooperation. Along with it, you might have income tax, okay, CGT calculation maybe, okay. So now, in relation to this, these are the four exhibits. Exhibits are given in detail. First one is about memorandum. Mostly the information, background information is mostly given in exhibit 1. That's why exhibit 1 is very important. 2, it's about a schedule prepared by a junior member. So you can assume he will be making some errors here. That's why they have given specially junior member. That's for you to correct. Some schedule is prepared, you have to correct it. Next, extract from a memorandum and work to be carried out. This is your requirements are in your exhibit 4. Okay, so if I go through exhibit 1, okay, you can see who is Gail. Okay, very important is always check the resident part and the domicile part. Is he in UK or overseas? That's very important. Okay, so Gail, this is about Gail. This is Gail's background. Okay, he's a resident and domicile in UK. Done. That means he is charged to worldwide tax. No issue. Okay, owning ordinary share in A Limited, works full time also, and A owns ordinary share in Z. So this is about A and Z. There are two companies. Both are UK resident trading companies. Okay, and they both pay corporation tax at the main rate. So everything has been given to you. What is the main rate of corporation tax? 25%. Already given to you. Both are UK resident trading company. Okay, this is very important for you to decide on your reliefs that you are going to get later on. These are historical transaction. These are proposed transaction that is going to happen. Okay, remember all transactions are at market value here also, here also. Okay, this is for A and Z, and dates are given in a chronological order, nothing to worry. Okay, so A acquired Z for 180 and this is whole, that means 100% ownership. Okay, A sold a building to Z. So this because they are in what? They are in group. This is a group question, you have to understand. A and Z are part of a group. They are 75% group. They will fall in the gain group also, and also for their income tax, for their trading loss also they can get a relief. because they are in the 75% group, both A and Z. So this is a group transaction. A is selling a building to Z for 110. A has purchased this building for 75 on this date. Okay, now A is selling a brand to Z for 170. This is an intangible asset, IA, for 230. Its market value was 230, selling it for 170, purchased it for 115. Okay, we leave it. Next, this is very important. Okay, Gail intends to raise a substantial sum of money by carrying out the following transaction. This is very important. Okay, see, always start with the requirements, not with the exhibit in detail. So first I'll go to exhibit 4. Okay, this is for 11 marks. You see, you have been given the RPI. This is for your indexation allowance for you to adjust. This is when you are doing CGT. This you have to use exhibit 1 and 2 for this requirement. Already they have given to you. So life is solved. Okay. So here they are saying, what is the requirement? See, he is confirming there are no computational error in that schedule that was made in exhibit 1 and 2. But I suspect he might made some few technical error. So your job is, please identify and explain 2 requirements. First, identify the issue, error, then explain the error in the schedule. Explain whether or not the notes to the schedule are or not correct. How many requirements? Identify, explain, 2 requirements. 1, 2, third requirement, notes. Whether notes are correct or not. Notes to the schedule, that also you have to say. And the fourth requirement, calculate the correct amount of total cash available to pay to Gail. Total cash, correct amount you have to calculate. So 4 requirements in a single requirement. You see, you have to identify this. Now, next, part B. Part B, clearly they have told use exhibit 1 in bracket. C also exhibit 1, but they are for lesser marks. Usually, requirement A and B are for lengthy marks, and when you come later down, usually that's the pattern, the marks reduces. Okay, so B is for 9 marks. Here you have to calculate. Okay, you have to calculate what additional tax. See, this is additional tax. Some tax they have calculated. Now additional to this you have to calculate. You have to know how to work in margins. Okay, and NIC as reduced by any corporation tax saving. You might get some corporation tax saving. We'll see how. If all of the cash realized of A as a result of the proposed transaction 1 and 2 is paid to form in a bonus and dividend, both you have to do. Under both you have to find. Next, income tax liability is given 21,432. This is for salary. Annual salary is 85,000. Okay, from A. Gail is getting salary of 85,000 from A, and the income tax they have calculated based on this salary. Already they have calculated. Don't go and calculate back and check whether it's correct or not. It's correct. They have told computational is correct. Okay, this is the oldest source of income. Next, C. This is ethics. Ethics is mostly for 5 marks. You will always get an ethical question in your section A, 50 marks question. Remember this. Be prepared for ethics. I will show you when we go to ethics how to solve ethical question. Okay. So now, state the other matters which needs to be considered by us and Gail in relation to the disclosure of error. When you're disclosing an error to HMRC, what are the issues you need to consider? 5 marks. So 5 points you have to give. 5 separate points you have to give. D. For D you have to use a separate exhibit. 3. You see, they are always following the chronological order. The way they have given in the exhibit, the requirement is also like that. For example, if you see A, B and C are using exhibit 1. A is using in fact 1 and 2. B and C are using 1 and D is using exhibit 3. Exhibit 4 is just the requirement. So 3 exhibits basically. So you see, they are following the order 1, 2, 3. So you don't have to jump or shuffle. So things is very easy. Inheritance tax you will get in exhibit 3. Even if they don't mention exhibit 3 here, it is when you go to exhibit 3, you know, inheritance tax information is there in exhibit 3 when you read it. So here there are two requirements. One is for 7 marks, one is for 8 marks. First one is your book knowledge. You can straight away answer it. You don't need support of any other parts. That is, explain inheritance tax advantage of making lifetime gifts to individuals in general. That means all your exemptions, reliefs you can talk about here. 7 marks. Second part is a little difficult one. Here you have to do some calculation. Three things you have to do. 1, 2, 3. Calculate fall in value. Remember there's a fall in value relief. I've explained you in my lecture. Yes, that you have to calculate when you're gifting a gift to from the Brad's state. Brad is the father of Gail who died. And from his state is giving a gift. What is the fall in value? Next, detailed explanation. Whether a business property relief will be available or not. And on the assumption that it would be available, the manner which it would be calculated. If you're assuming it's available, how it will be calculated. There are two requirements under one, inside one. Next, state briefly any other tax issue. This is other tax issue, other than inheritance from the gift, which will need to be considered at a later date. So you see, all your instructions are there in exhibit 4 is for 40 marks, 10 is professional skill marks. All the professional skill marks are tested here. Communication, analysis and evaluation, skepticism and commercial acumen. There are 4. Okay, in this question, marking scheme is given. I've copy pasted the marking scheme. I will take you through marking scheme. I will take you through the top tips given by the tutor. I will take you through the examiner's comment for this question. It's very important. So this question, it's your choice. You can do it in any order. You can straight away start with C also. It's ethics or first part of D, your choice. But for B, you can't do B without doing A. You need A first to calculate B. Why? Because here correct amount of cash available to pay to Gail. You need that amount of cash to pay to Gail for you to calculate bonus and dividend. You understand? That's why you need that A. A is dependent on B. C is a standalone question. It's not dependent on anything. Also the first part of D. Straight away you can answer. They are not dependent on anything else. Okay. So now it's my way of approaching from in the order, because I always believe that anyway you have to do it later on now. So I don't waste so much of time picking up which order to do. I straight away start with in the order. Okay, but provided if it's very hard, then I don't attempt. Okay, I opt for the easiest one. So in this question, if I was you as a student, I would be attempting the A, because reason is calculations are there and 11 marks is there. Okay, so now I have read the requirements. Now I can go through the exhibit. If you see the exhibit here, exhibit 3 is about inheritance. I'm not going to read it now. I don't need it for my requirement 1, but I need exhibit 1 and 2. 1 I have finished. Okay, 1 I'm still in the 1. So here, non-disclosure of income I don't need right now. It's about that they have not disclosed some income. What could be the penalties and interest? So, wait. I have already explained the interest and penalties. Already explained. So this you can't put in your answer again. You can't say I'm going to explain interest and penalty. Already it's discussed. Okay. Now here. So these 3 things I need. Z will sell the building to an unrelated purchaser. That means outside the group for 140,000. You need this figure. Very important. I will highlight it out for you. Rolled over relief is not claimed. Z will pay a dividend to A equal to post-tax proceed of the sale. Post-tax means after the sale, after you deduct the tax from the proceed. Okay, that means after deducting corporation tax. Next, A sell the whole of the ordinary share capital. That means entire share capital. You have to see whether substantial shareholding exemption is available or not for this, because you are selling entire share. and it's a trading company, and you have to see whether you're owning it for 12 months or not. Of Z for 250, this you need. This figure also you need in your calculation. Next, all of the cash realized by A as a result of transaction 1 and 2. What are transaction 1 and 2? This one. This is 1. This is 2. So all of the cash realized by A as a result of transaction 1 and 2 will be paid to Gail in the form of either dividend or bonus. That is what requirement 2 asked, right? Now next. So we'll go to exhibit 2. Okay. Exhibit 3 we don't need right now. We'll read it when we do the last requirement, inheritance tax. For now, exhibit 2 they have prepared some schedule. Let's go through this. This is the result of the 1 and 2 and it's incorrect. What they have done, sale proceed is 140. I've highlighted 140 somewhere. You see, yes, this 140. They have taken it correctly. That's correct. But they have deducted the cost 110 and this they have taken the indexation allowance to this date. Okay, we'll see. Okay, if you're thinking it's incorrect, okay, we'll wait. We are still in the question. We didn't come to the solution yet. So this is incorrect because we can't take indexation after December 2017. It's only till December 2017 we can take the indexation allowance. They have taken till this date. So this is itself is wrong. And the cost is wrong. Why? Intra-group. When it's an intra-group, cost is different. So this that means this chargeable gain is wrong. So based on that, whatever the corporation tax, it will be wrong. Okay, ultimately it will be wrong. So this cash available is wrong. This sale proceed is correct. This 250 they have taken is from transaction 2. This 250. You see, they have sold the shares and got this 250. They have added this with the selling of the building. And then total cash. So this is wrong. Now your job is to correct it. Now they have also told whether the notes are correct or not. Notes 1 and 2. Note 1. I do not think there will be chargeable gain on the sale of Zeppa due to the substantial shareholding exemption. We'll keep it. I think there will be degrouping charge in respect of the brand, but I do not know how to compute it. Leave it. So straight away, we'll go to the answer. Okay. So now, first we'll go through some key answer tips. Okay. If you see your revision kit answer, it starts with this. I'm not going to read line by line, but I've already read it. I'm quickly going to take you through some important points. Okay, you have to understand overall this question. This question is about corporation tax groups. Okay, it is focusing mostly on capital gain group. They are having some capital transaction, no, selling of shares, selling of building. These are capital nature goods. So you have to see whether they are part of a capital gain group or not. If they are part of a capital gain group, they can it's a no gain no loss transfer among them. They can utilize the losses among them. And that's the first part. Second part is section A, withdrawal of company profits via bonus or dividend, and ethics is the third one, and inheritance tax. 4 areas they are asking you. Okay. Part A, you have to identify error made in the schedule. Okay. There were 2 disposal. One is shares, they are selling shares. One is they are selling building. Part B. So part A is done. Part B, you are comparing bonus and dividend, which one is most tax efficient, and also considering income tax, NIC, and corporation tax implication. 3 things. Part C. Part C, remember, is the easiest one. Any question, ethics is the easiest one. So try to get marks there. It's an easy mark. Okay. And this is a regularly tested area. You can even attempt this as first also as a standalone question. Part D, IST is divided into 2 parts. First one is about advantages of making lifetime gift. Second part is about a gift of shares. So here you need the knowledge of valuation rules. Okay, this is about related property among the husband and wife. You need that rule. Also, business property relief is asked. So you need that. And also other tax issues. Okay. So now, as we go through the answer, the highlighted words are the one that has to be there in your answer. I'm not going to write the answer for you. I'm going to take you through the answer. Okay. Next. So these are some tutors' top tips. I still didn't come to part A. I'm going through the tips only. Okay. So now, how much you have to write, ma'am, how much I have to write depending on your marks. If it's 7 marks, 7 points, like that. 1 mark for 1 point. Okay. So all these are tips on your CB platform. What you have to do, copy paste requirement in your worksheet. Then you can type there so that this saves time rather than keeping all your windows open. All these things are there. Okay. So because this is a group of companies, okay, wise thing is draw a group structure. That means A is owning Z 100%, like this. Gail is having a share in both of this. Okay. Next. So let's come to A. Schedule prepared by Mill. Remember, what is the requirement asking you? Go to the detailed requirement. Prepare briefing notes. Remember, one of your communication skill. This is your professional skill, right? Communication. This is only tested in section A. That means format, correct format. There are no structure for briefing notes, okay? But write a proper subheading. Under that, write in paragraphs. That's enough. So first is schedule prepared by Mill. You will get what you have to write as a subheading from your requirement itself. So you don't have to memorize or think so much about it. So schedule prepared by Mill. Okay. So here, if you see A, schedule prepared by Mill, it's enough. Don't write exhibit 1 and 2 in your answer. That's your question. So schedule prepared by Mill. Write a proper subheading like this. You are going to get your professional skill marks for this. You have to write it. Just don't write A and start answering and start calculating. No. Always students jump towards calculation first. This should be avoided. This is a very wrong technique. First, you have to write the proper subheading because you're going to get your professional skill marks along with it. This is, you can say, you're writing a briefing note. Okay, so just a note. So now, before you answer, your answer starts from here. There are two things they asked. Two things. One is about the computation. You have to talk about. The other one is the notes. You see how nicely they are writing the subheadings in bold. So when you are typing, computation part separate, notes separate, like this. You have to separate like this and in separate points like this. 1, 2, 3. Notes. 1, 2. Do not mix them together. Okay. And then there is a calculation part. Then they have calculated it. But before this, first let us go through the tutor's top tips. That's very important. Okay. See, this question, understand the question. Scenario is you are selling shares. You are selling entire share. When you're selling shares, always you have to see whether you are eligible for SSE, substantial shareholding exemption or not. This is always important. Okay. Even if you are not sure whether you have met it or not, you will still get marks for stating the condition. At least state the condition that if this are met, you might be eligible for SSE. You will always get marks without a doubt. Whether you have met SSC or not doesn't matter. If you state the condition, at least you will get some marks. Okay. Next. This is a capital gain group question. They didn't clearly specify capital gain group, but it's understood. They are making some capital transaction among themselves. They're in 100%. They're 75% group. Okay. So capital gain group, and they are selling what? Brand. Brand is an intangible asset. So for intangible asset, remember, an intangibles degrouping charge will arise. if a company leaves a group, still owning that asset within the last 6 years. They are owning that asset that they have received from another gain group on a tax neutral basis. Tax neutral means no gain, no loss. If they are receiving asset and within 6 years they are owning still it and then they are leaving the group with that asset, degrouping charge will arise for that brand. Otherwise, no. Okay. So now let us go through the computation. They have told you clearly whether this is eligible or not, the computation part. So first, what are the three things you have to talk in computation? Three things you have to talk in computation. One is the chargeable gain you have to talk about. This is number one. About this you have to talk about. That's what they have done here. This first point is about chargeable gain. You see, chargeable gain. Next is about the post-tax proceed. Okay, whether that is correct or not. You see here, post-tax. Post-tax proceed. And next is dividend. Of course, dividend. So third is dividend. Third is dividend income. Three things you have to talk about computation. Okay. So in the computation, state by saying whether it's correct or not. We now know it's incorrect. So that's your first sentence. Chargeable gain on the sale of Simpson building is incorrect. Okay. Now, why? Now see here. You have to mention because they are part of the capital gain group, it will take at no gain, no loss. If you see here, this is highlighted also. This is in highlighted version. That means this sentence has to be there, no gain, no loss. For this highlighted things, you are getting marks. Okay, because this sale of a building will take place at no gain, no loss. Why? Both A and Z are part of a capital gain group. That's why. If they were not part of a group, then this wouldn't have been the scenario. Why they are part of a group? A owns at least 75% of Z. So because of this, you have to talk about the Z's base costs. Don't forget. So the base cost of the building of the Z is the amount that A has paid for the building of A plus indexation allowance up to December 2017. Whatever the cost A has given that time for the building, that will be the same cost for Z brought forward because no gain, no loss, but with indexation. Why? Earlier, this was transferred from A to Z at no gain, no loss. First, we are writing this. Later, when we are doing here the calculation, then we are correcting it here. You see, here we are correcting it. But first, let's write it. Then, post-tax. So, the post-tax proceed will be the sale. Wait, I'll highlight it for you. They will be the sale proceed less the corporation tax, not the chargeable gain less corporation. No, sale proceed is a cash. Corporation tax you are paying in cash. So from your sale proceed, from your cash, you are deducting your tax. That's how it is. Not the chargeable gain minus corporation tax. So that is incorrect. You see here, if you come back here, what you are doing here, you are deducting from your chargeable gain. From your chargeable gain, you are deducting these corporation taxes and getting the cash available. It's incorrect. It's from your sale proceed. So two things are solved. Third thing, dividend income. This is a UK company. So any dividend income will not be subject to corporation tax. Dividend income not subject to corporation tax. This is the highlighted word. And this also you have to write, not chargeable gain. So dividend income not subject to corporation tax. Why? Where is the, you see here? You have deducted the dividend of post tax. You see dividend also you have deducted. From dividend you have deducted corporation tax. But dividend has no impact on corporation tax. So accordingly, A will not have a corporation tax liability. A will not have a corporation tax liability in respect of dividend received from Z. It's only from the sale of the building. Okay, so that part is over. Computation part you have corrected. You have written because they told explain, identify and explain. You have identified, you have explained. Now the notes. First note was about substantial shareholding exemption. What was the first note? Let's go to the notes again. In case you forgot, you can always refer back to the exhibit like this, how I'm doing. First note, I do not think there will be chargeable gain on the sale of Zephyr due to the substantial shareholding exemption. Is he correct? Here, first always list the conditions of SSE. Then you will state whether it is available or not. So this is available where a company sells shares in a trading company. Okay, out of 10%, because 10% is the substantial shareholding. Substantial shareholding means out of 10%, you are selling shares and it's a trading company. Okay, first condition. Second condition, 12 months owning period. So this shareholding has to be owned for a continuous, not like this you are selling now, buying again, selling now. No, continuous period of at least 12 months in the 6 year prior to the sale. So two conditions are there. So is this a trading company? Forgot? Don't worry, go back to exhibit 1. In case you forgot, always go back to exhibit 1. They have told it's a UK resident trading company. Done. They are owning full time. They have full time and full own the whole of the share capital. Okay. And when did they get it? On this date, 2016. Today is 2024. So from 16 to 24, how many years? 8 years. 8 years. Okay. You don't have to be so exact, but it's more than 6 years. And you are owning it for 12 months. So conditions are fulfilled. It's a trading company. You are owning at least 10% and you are owning it for 12 months out of 6 years before the sale. Therefore, then you write the conclusion. SSC will be available on the sale. Accordingly, SSA will be available on the sale. You see how is the structure? You don't immediately say SSA is available or not available. You first write the condition. If this are there, this is available. If this are not present, not available. Alas. Coming to note 2. Intangible asset. Note 2. Go back. Read again. Even if it's a little time consuming, do not worry, it saves time. Be very clearly focused on your requirement. Okay. He thinks there's a degrouping charge in respect of the brand. Okay. You have sold a brand also. So now, this also condition first. So here, intangible asset is the brand. This has been transferred to Z on a tax neutral basis within 6 years of the sale of Z. Okay. Normally, there's a degrouping charge for it in Z. But this will not arise. Why? Because SSC applies to the sale of the share. You see, when SSC applies, there will be no degrouping charge. If SSC does not apply, then degrouping charge will arise normally. So done. Now we'll start calculating. So now, sale proceed. How much did we sell it for? 140,000. What is the cost? Not 110. This cost you have to take from, this is the A's cost. A took it for 75,000. When he purchased the building, he purchased it for 75. This becomes the cost of the Z also, because it's transferred at no gain, no loss. So 75. With this, you have to add indexation. Indexation from December 2012 to December 2017. Why December 12? Because this was purchased on December 12. A purchased it, is carried forward to Z. So indexation allowance is given to you here. Wait a minute. No, somewhere it's given there. Yes, in exhibit 4. You see, from this date to this date, you have to take this. Okay, this exhibit you have to take 0.127. So 0.127 you multiply with the cost, you add this, and then this becomes the cost. You deduct this from this, and this becomes your chargeable gain. Now compute this chargeable with this. It's 55 something, and what you got in the schedule was 18,415, much lesser than that. It's incorrect because your sale proceed was wrong. Now, from then, see, this you're not deducting. This is not deduction. No, this is you are separately calculating the corporation tax. Okay, so your corporation tax on this gain, remember, they are paying at main rate. Already it's given in exhibit 1. So 25% is the main rate. So this is your tax now. This tax you have to deduct from what? Sale proceed, not gain. So sale proceed is 140. Deduct this corporation tax, and this is your dividend that you have to pay to A. When you're selling this building, when building is sold by Z, this is how much dividend will be paid to A. So this you have to add with the sale proceed in respect of Z. One, you are selling building, from that you are getting 126,131. The other one you are selling the shares, from there you are getting 250. So if you add this two, you are getting 376,131. This is the total cash that will be available for Gail. It's very simple, very easy. This is correct in your schedule also. If you see here, 250, they have taken this 250 here. This 250 they have got from here. This 250, the point number 2, this 250. They're selling entire share, they are getting 250. Done. So now we'll come to B. Even in the tutorial note, they have told indexation allowance is not permitted after December 2017. This you have to remember. Okay. So you don't need the indexation allowance from the transfer date to the date of eventual sale. You don't need that. You only need till December 2017. Coming to part B. Part A is over. Part B is what? Go to the requirement. Payment to Gail. Whatever they have taken as topic, you also copy paste it. First one was schedule prepared by mill. A is over. Now it is payment to Gail. Next one will be non-disclosure of income. Third one will be inheritance tax, like that. So payment to Gail, part B. It's dividend versus bonus. Here there are lots of calculations. So payment to Gail. This is how you have to write. Okay. So remember, the computation part is very easy. It is very straightforward, bonus and dividend. But you have to remember one thing. Bonus will give rise to a corporation tax deduction. If you're having a bonus, your corporation tax will reduce, but not dividend. Why? See, bonus, salary, these are all company expenses. So from company income, you can deduct this as an expense. Therefore, if your expense decreases, that means your gain, your income company, your company profit reduces because of increase in bonus. Bonus is an expense for a company, right? So company profit will reduce. Company profit reduce means your corporation tax will reduce. You see, dividend is not like that. Dividend does not have an impact in corporation tax because dividend we do not deduct as an expense in the corporation tax calculation. That's why. Okay. And when you're doing the dividend calculation part, when you're finding income tax, do not forget the dividend nil rate band and apportion it correctly in the higher rate and the additional rate band. Basic, higher, additional. You don't need them in your answer, they're just for your understanding purpose. So now first let us do the bonus. You need this figure. That's why we needed part A. What is this 376131? This is the total cash. This one. I will highlight it in green for you. This one. This is the amount that you need. Total cash available for Gail. Either you will give them as a bonus or you will give it as a dividend. So we want to see the tax implication. So this is the amount. This, if you get it correctly, your part B will be correct. So 376131. This is your bonus. You see here? It is this. Now you need the additional taxes because of this bonus. Same here for dividend. If you are paying the dividend, same amount. What is the total additional taxes? That's what we are calculating. First, we'll finish with the bonus part. Anything you can do first. There is no order. Okay. So here, annual income is 85,000. See this annual 85, whether it's dividend or bonus, salary is there. They have given it here. You see, 85,000. They have told. This is the only source of income. With this, you will get bonus or dividend. And they have got the income also for you. So 85,000. Then your dividend income is, sorry, I should be in the bonus section. Yes. So this is your salary, bonus, net income. You see your net income is exceeding 125, 140. So that's why personal allowance. Do not forget to deduct personal allowance as your net income. You are now coming back to income tax. You see, this is why you have to switch from one type of tax to another tax. That's why you have to be pro in all the type of taxes. This is the hard part in ATX. When to start income tax, when is CGT starting, what are the rates? This was not there in tax. In tax, it's very easy. You know, this is income tax only, this is CGD only, this is inheritance only. ATX is not like that. Quickly have to shift from. So come back from corporation to income tax. Okay, it's your net income. Deduct personal, then you get your taxable income. It's the same as net. This take tax rate. Do not forget the tax rate. This is employment bonus. This is non-savings at non-savings rate 20, 40, 45%. So first 37,700 at 20, the next is at 40, the balance is at 45%, and you will get the tax. Remember, already they have calculated the tax for you for this 85,000. That is this 21,432. They have given it to you. In fact, here you see this 21,432. They have told annual income tax in respect of the annual salary is this much. So you have to deduct it. And this is your additional income tax. That means this tax is only on bonus. Because it's a bonus, remember bonus, it's a cash, you take it in your NIC calculation. In your NIC, salary, bonus, all this comes. So what type of NIC you have to pay? Bonus. You have to pay two types of NIC. Employees class 1 NIC, employers class 1 NIC for bonus. Employers is easy. It is at 13.8%. On which? On bonus. What is the bonus? Not on the additional income tax. No. On this. See, this additional income tax, this is separate. This part is separate. NIC part is separate, okay? You later add NIC and income tax. But you calculate NIC on the bonus, not on income tax. So that's why 376,131 into 13.8. Same, if you see the income, 376,131. This is higher than the rate, the upper limit. If you go through the NIC table, I don't have the table with me right now. It is higher than the upper. If it's higher than some 50,000 something, NIC rate is 2%. Okay, NIC rate is what? 2%. Do not forget this. You can refer back to the NIC table. Next time I'll copy paste the NIC table also in my next question. The limits are given there. The upper threshold, lower thresholds, higher than the upper threshold, the profit. So that's why it's 2%. So employers you will add, and because of bonus, corporation tax will reduce. That reduction you have to deduct how much? With the bonus, you will add employers NIC only, because only in corporation tax you need employer. It's a company, self-employed. Remember, it's a company, your own company. So you will only take your own expense. Employers NIC you can deduct, not employee. Employees want employers to pay. Employer, it's from the company. That's why you are adding it with the bonus. So add employers NIC with this and main rate 25%. This corporation tax will be reduced. This is your total additional tax where bonus is paid. Okay, 124,700. You have to take this NIC here, not 7523. That's employee. That's employee's part. It doesn't come in the corporation tax calculation. Now, even how much you can deduct this corporation tax? See, you have deducted 107,009 because you had enough profit. You had sufficient taxable profit for it to be deducted. If you would have lesser profit, you would not be able to deduct the entire amount. Depends on the how much taxable profit you have for you to deduct the corporation tax. So that reduction in corporation tax is dependent on that. Okay. In this case, because you have a higher profit, you could deduct the entire corporation tax. Otherwise, it's not always the case. Coming to dividend. Dividend also, salary will be same 85. This is your dividend. No personal allowance here. It is 0. In this case, because if you see, it's more than 125 something. So this is your taxable income. Same. Remember, for first 85,000, see earlier both bonus and salary falls under non-savings. That's why 20, 40, 45%. Here, only 85,000 is non-savings. But this is dividend. You have to follow the dividend rate. So first 85,000 non-savings rate. That's why 20, 40%, and then the dividend rate starts. So out of this first 37,720, the remaining is at 40% to make it 85 at non-savings rate. Then coming to dividend. Remember, first 1,000 dividend nil rate band, irrespective of your income level, 0%. So 1,000 at 0. Still, there are some in higher rate, which you can. There are some dividend which is remaining in the higher income level band. That's why 33.7, and the balance is 39.35%. You can always check whether this is the total or not. Okay, and this is your tax. Already on this 85,000, tax was calculated, same like bonus, you deduct it, and this is your additional tax. Remember, dividend has no NIC or corporation tax implication, unlike bonus. That's why this is only your tax. If you compare the tax, which one is tax efficient, dividend or as bonus? Here you have to pay additional tax 150, 450. Here you have to pay 124, 700. Bonus is tax efficient compared to dividend because it's reducing your corporation tax as well as NIC is there. You see, this is what the question asked you, isn't it? So the requirement asked you to explain or anything? No, they just asked you to calculate. That's why we are just focusing on calculation. No, nothing to calculate, nothing to explain. I'm sorry. Unlike in A where you had to explain also. C, state, 5 points, non-disclosure of income. So C, disclosure of error. This is an ethical question. It always appears in section A for 5 marks. And it's easy also to get. Make sure at least 5 separate points you give and write in short paragraph. Don't write in too lengthy. 1 or 2 line is enough. Sometimes 1 line, sometimes 2 line. You might not need to extend more than 2 lines. Okay. So now, if you see here how many points are there, each point in different paragraph, then you know how many points you have wrote. 1, 2, 3, 4, and fifth point. So you are getting the 5 marks. This is the order you have to follow. First, you have to state. See, the question is state, not explain. So the error have to be disclosed to HMRC. Number 1. Number 2, Gail may inform HMRC by herself, or she may authorize us to do so. Us to do so means you as a manager, tax manager. Either Gail might inform HMRC or Gail might give you the authorization to inform HMRC. However, we must. So you have to write in a professional tone. This is what you are writing. You can't say I must or I should do this or according to my opinion, I think we should know. Avoid such languages. Okay, we must not disclose the error to HMRC unless we have our permission. This is very important. Yes, you must disclose the error, but you can't. Gail can do, but you can't disclose the error to HMRC unless Gail gives you the authorization. Second point is over. Third one. If Gail is not making the disclosure, you can't continue to add. Okay. Fourth, you should also see whether there are some further errors to disclose or not. You have to see how the error arose and you should inform this to money laundering officer, MLO. Mention this in your answer in ethics. MLO, money laundering officer. Coming to the next one. Consequences. Always write the consequences at the end. You should notify Gail of the consequences of not disclosing it to HMRC. What are the two consequences? First consequence, second consequence. What are the two consequences? First, if she refuses to disclose, you can advise HMRC that you are no longer going to add for her. But you should not give any reason. Not give any reason why you're not acting. You just say you're not acting if they refuse to disclose. Next, remember when you're not disclosing error, it is also a tax evasion. This you have to write in your answer, tax evasion. That's why it's highlighted. Non-disclosure of income, non-disclosure of error is a tax evasion also. So because it's a tax evasion, what are the consequences of tax evasion? Criminal proceeding. Under both the tax rule and money laundering legislation, it's a criminal proceeding. Okay, next is inheritance tax, part D. First one is very easy, 7 marks, advantages of making lifetime gift. So we don't need the case study for it. Straight away we can answer this. Okay. Remember the question asked advantages. Don't write disadvantages there. You're not going to get extra marks. You're going to waste time. Okay. So now, so if you see here, if you see the points 1, 2, 3, okay, this is 6, 7. In this third one, 3, 4, 5. So this point is here. This is one paragraph. So this 3, 4, 5, 3 points they are giving. So how many benefits? 1, 2, 3, 3, 4, 5 under 1 and 6, 7. So 7 points they are giving and you are getting the 7 marks. 7 advantages. Advantages means reliefs, any type of gains they are getting, right? So quickly, this is a knowledge, pure knowledge, textbook knowledge. Quickly we'll go and hit the question. Okay. Because this is a lifetime gift, you are going to get potentially exempt transfer. PET. It's a PET. If you are giving it to an individual, remember it's not to a trust. If it's a trust, it's a chargeable transfer. Chargeable lifetime transfer. Because this is to an individual, it might become a PET. So it's an advantage. Okay, if the donor survives the 7 years, you have to talk about this donor surviving 7 years. Just writing PET is not enough. So donor surviving 7 years, PET might become exempt from inheritance. First advantage. Second advantage. If the donor dies within the 7 years, gift will be chargeable to inheritance. Okay, if donor dies within 7 years. But the value that you are using at the time the value that you are using for inheritance is at the time of gift, not at the time of death. So that means any increase in value of the gift will not be taken into account, is ignored. Only, and if the asset falls in value, you are going to get a relief for that also, fall in value relief. So any increase in the value of asset is ignored. Second advantage. Third advantage, there are some exemptions there. And these exemptions are only for lifetime gift, not for death state. We'll see those three exemptions. First exemption, annual exemption of 3,000. Next exemption, marriage exemption. There are up to certain limit, gifts in consideration of marriage is exempted. Third, regular gift out of income that do not affect the donor standard of living. And small gift exemption of 250 per donee in per tax year. All this, that's why you have to learn all this. While you're studying, preparing inheritance, you have to learn all these types of exemptions. Very important for you to answer inheritance tax. So this you will only get when it's a lifetime gift, not death state. Next, if the donor, still if the donor dies, but if donor survives more than 3 years, the the inheritance tax will be reduced by the TAPA relief. Next advantage, tax due will be reduced by 20% if the donor survives the gift by more than 3 but less than 4. And this percentage keeps reducing, sorry, the percentage reduction, that means percentage reduction in your inheritance will increase by 20% for each additional year that the donor survives the gift. The more the donor survives, the better it's for you. Your inheritance tax keeps reducing by 20% each year. Next. So you see how many advantages. 7 points is over. Now coming to the last part. Okay. Last part we haven't read yet in the requirement. So we'll go through the exhibit 3 now. Okay. So this is about exhibit 3. Okay. So this is about Braid's father, 70 years old, married to Laura. Both are UK domicile, no issue. Bread's estate is 5 million. No lifetime gift. Half of the estate is left to daughter Gail. Other half is with Laura. And she is planning, Bread is agreeing to consider giving Gail 1,500 of his shares in this company. Okay, this is an unquoted company. Brett was given his shares in the company by his wife on 1st of January 2020. Wife also has there. An ownership percentage is given. Brett wife, Brett, Laura's brother, friend of Laura. So this is a related property. If it's a related property, you have to take only Brett and Brett's wife. This together. And shareholding is given that you can calculate very easily. So here, related property rule you have to use. Okay. So how are you going to use the rule? See. Brett wife and this one Brett together, if you add, is 7,500 out of 10,000, right? So that means 75%. So 75% to 80 is 290. Okay, how many shares are there? 1,500 shares you are selling. And just Brad, you have to just take Brad's percentage. 3,000, that means 30%. 30% falls here. 205. So you need this two figure. 290 and 205. So same we are going to apply here. Okay. So here you see there are three elements. One is fall in value. One is number of share you have to calculate. Okay. Now, so how are you going to do? One is fall in value. You can do. Before the gift, Brad is owning 30%, 3,000 shares. 1,500 is gifting means he will be having 15%. But together, if you take the wife interest of 40, combined ownership is 75. From 75, 15 goes, it will drop to 60%. So now, for this 3,000, this is the price, and for 1,500, because from 3,000, 1,500 you are giving, you are left with 1,500 shares, 240, 510. This you can do through related property rule also, like this: A divided by A plus B. This is a long cut, but this is the shortcut that examiner has used in your exam. Try to use shortcut. You are still going to get full marks. Why? It saves time. But if you have enough time, if you want to go through this related property rule, you can go it. How? 7,500. Okay, this is the combined ownership 290 into, when you are taking this 3,000, it's only Brad's. Okay, divide by the total. This is before. After, this is combined. Okay, from 7,500, 1,500 goes, you are left with 6,000. Accordingly take the price, and then you are left with 1,500. This is only Brad's. Okay, this is only Brad's, and you will still get the same values, the same. Okay, remember, ignoring the related property. If you relate the ignore property, just take Brad's. So this 3,000, this is okay. Based on that, this will be the percentages. Okay, 15%, 30%, this will be the prices, and you will get this amount. So you always have to use the higher fall in value, that is 510. This you have to use, not 330. Okay, but you don't have to calculate both this way. Ignoring, you should always go by related property rule. You should not do this two ways. Okay, because mostly when you are going to do related property, mostly this related property that is going to give you the higher value rule. So by that, we go by that. So that's done. Next is business property relief. Okay, so we have finished the fall in value. Now business property relief, because this is inheritance tax. Okay, so here you have to see what company the business is involved in. Okay, if the company is in, remember, this will not be available if it is dealing in securities, stocks or shares, land and building, or making or holding investment. If they are into this, business property will not be available. Okay, so you have to determine the nature of their activity. Now remember, BPR. For this BPR, for BPR, you have to meet certain conditions like how we have done for SSE. Okay, you have to list these conditions, very important. So they have to own the shares for at least 2 years, that is the condition, and this condition is satisfied. Next, this relief will not be available unless Gail still owns the shares at the time of Brad's death. During Brad's death, Gail has to own the shares for BPR to apply. Okay, and the shares continue to qualify for the relief. Now, so if all of the conditions set out above are satisfied, business property relief will be available at what rate? See, they also told one requirement. Assuming if BPR is available, how it will be calculated. That also you have to write. So if all conditions are satisfied, BPR will be available at the rate of 100%. Why 100%? That also you have to write. Because this is an unquoted company. Unquoted. Unquoted is the word. If it was quoted, it would not be 100%. Okay. Now, next, last requirement is other tax issues. You have to put a proper subheading like this. Okay, so now, gift of shares. See, what are they asking? They're not asking inheritance tax. Okay, one, you can talk about stamp duty. So gift of share, when you're gifting a share, there are no stamp duty that arises. Number one. Number two, the gift of share will be at a disposal at market value for the purpose of capital gain tax. So the two types of taxes, CGT and stamp duty. This is not subject to, so for CGT purpose, it will be at market value. Okay, and here gift holdover relief will be available if the company is a trading company. See, they have not mentioned much about the company, right? They have not mentioned much about the company. So you should always write like this. If this company was a trading company, this relief will be available. Okay. So now, so there are two tutorial notes. Let us go through it just for your understanding. They're saying BPR will only be relevant if Brad were to die within 7 years of making the gift, such that the PAT becomes chargeable transfer. Why do you need BPR at 100%? It's good if it's a chargeable transfer. Then only you can reduce it and make your inheritance tax to zero. But if it's a PAT and if it's exempt, that means if Brad survives the 7 year, then there is no advantage of BPR. No. So in that case, BPR is only relevant if Brad dies within 7 years. So your pet becomes chargeable, and chargeable also you can deduct BPR, and inheritance tax you don't have to pay. Next, BPR will also be available if Gail has disposed some of the shares before Brad's death, and then they have acquired a qualifying replacement property within 3 years of that disposal. Then they will get a BPR. Okay. Now, so the question asks for bridge statement only of the other tax issue. Do not waste time writing lots of detail here. Do not waste time writing lots of detail here. I cannot stop myself emphasizing enough on that. So that's it. We have finished the entire requirement. Now let us go to the examiner's report. I have read the examiner's report and I'm expecting you, please take your own time, own sweet time, and read the examiner's report. It's very important. It highlights where are the students' weaknesses, what are the strengths of the students part by part. So part A, when we are correcting the schedule, okay, where students were asked to identify technical error. Okay, there were 3 error that has to be spot, and candidates did quite well on that areas. That means candidates were able to spot the error. Okay, so the first error was about the sale of a building. That means to get the correct chargeable gain. Okay, so because this was from a group company at no gain, no loss, base cost was the original cost to the group. And good thing is most of you were able to identify this point. Next error, second error, was the calculating of post-tax proceed. This, what did the junior member do? They have deducted the tax from the gain. Rather, you have to deduct it from the sale profit. Remember, this is a very common error, even in your previous sittings also. But in this case, candidates were not able to identify this error, very few. That means you have to work out on this. The final error is about treatment of dividend from a subsidiary. Okay. Majority of candidates were able to identify this error also. Okay. And also the notes schedule relating to degrouping and substantial shareholding exemption, they were able to identify. Now, what was difficult was degrouping charges. This is not easy. This is not easy to explain, and candidates found this difficult also. They don't know what was transferred at no gain, no loss. Which company was leaving the group? They're not sure. Okay. But many candidates could have benefited if they would have stated clearly the circumstances in which a degrouping charge would arise. At least write the circumstances. If this happens, degrouping charge might arise. Okay, at least some marks they will get. Now, regarding substantial shareholding exemption part, most of the students' knowledge was good. And most of the students got high marks on this area. Coming to part B, where you have to calculate bonus versus dividend, this is straightforward and it was done quite well. That means examiner was happy with this part. But regarding bonus, there was a common error. The common error was most of the students failed to recognize the corporation tax saving due to bonus. This was requested also in the question, but many students failed to recognize this. And also they have failed to consider the NIC implications. Regarding dividend, this was done pretty well. Okay. Next, third part of the question, that means ethics, where you have to disclose error. This is straightforward and done well. Okay. But some students were not prepared for this exam. They didn't attempt this question at all. And one error was they started explaining interest and penalty. You should avoid it. It's already explained. That's why read the requirements, read the exhibit very carefully from top to bottom. What has been mentioned, what has not been mentioned. Do not repeat. Okay. Last part, D. Okay, this was done well. first part was done well, but the next part was unsatisfactory. Advantages of lifetime gift, students were able to give. Okay, they have given some exemptions like pet, being exempt if donors survived 7 years, then TAPA relief if they have lived for 3 years, then value of gift being frozen at the time of gift, third one, availability of relief for any fall in value, the fourth one, they were able to identify this. Now, what's next? Most of the candidates, they would have known all these rules, but still they did not include them. What did they do instead? They wrote at length some points and some points they omitted. Most case, they did not even address the exemptions also available for lifetime gifting. Okay. Now, coming to the valuation of related property. Second part, this was mostly students scored full marks for that part. Okay. But some students, they were not aware the spouse's property is related. It is only the spouse's property that is related. And some even fail to appreciate that it is only the donor. Who is the donor here? Gail, not the spouse. Donor's property is valued. Okay. And regarding business property relief, this is also done well. They were able to identify the 2-year rule. Okay. But only few candidates stated the need for donee to continue owning the shares until the death of the donor. Few candidates were able to identify this point. Second point. The last. Candidates did not do so well when it came to identify other tax issue. Here they struggled. Why? They are repeating the basics of inheritance tax simply in relation to PET. But what was asked was CGT and stamp duty. So that's it. Now we are coming to the marking scheme straight away. First one was 11 marks. How this 11 marks is scattered across the question. First one is calculation. Next one is explanation, calculation. If you see, the explanation part is worth heavier marks compared to calculation. This is always the weightage. If you see, calculation is just 3 marks, whereas the rest 8 marks comes from your explanation. That's why you need to be very good in explaining the calculations that you're going to do. So first mark is for calculating the correct chargeable gain. Next, post-tax profit. Next is taxation of dividend by saying that it's not going to have an implication in corporation tax. Next, SAC. It's 2.5 because you have to explain a lot. Whereas post-tax profit and taxation of dividend are quite straightforward. That's why it's 1 mark. Degrouping charge. Again, you have to explain is 2 marks. And then no non-errors identified. 1 mark. Calculation part, other matters is 1.5. Chargeable gain when you're calculating is 1.5. Part B, when you're taking bonus and dividend, okay? So, for taxable income, 1.5, income tax liability 1.5, NIC 1.5, and reduction in corporation tax 1.5. Often students missed out this NNIC. Payment of dividend is calculation is 2.5 and no NIC liability or CGT. Even for saying that the no NIC or CGT 1 mark. Sometimes students might fail at 49. They might miss out on this 1 mark. Part C, ethics. Necessary to disclose 2.5, implications of failing to disclose 3, and other consider further error. If you say there might be other error, 1 mark. Total 5. D. So D, advantages. The 7-year rule. Valuation, that is fall in value. Then exemptions, the 3 exemptions. Fall in value 2 marks. 7-year rule 1 mark. TAPA relief 2 marks. Next, second part where you have to calculate fall in value. fall in value you have to calculate. Availability of BPR. Okay, so when you're taking availability of BPR, three things you have to consider. One, what is the business of Omnium? Is it in investment, securities, land and building, shares, or trading? Next, ownership of the shares. Are they owning it for 2 years? And circumstance on Brad's death. Is Gail still owning it on Brad's death? Next, calculation of that. Okay, that is rate of relief. Calculation of BPR at 100%, 1 mark. And other tax matters is 2.5 marks. So total 8. Now, coming to the professional skill marks, 10 marks. So the last part of this video is professional skill marks. I have completed entire everything. 4 professional skills starting with communication, because communication is only in section A. That is for your 50 marks question. In your section B, where you have 225 marks question, there is no communication skill marks. The other professional skill marks will be tested. So one is communication, one is analysis and evaluation. They're together. One is skepticism and the other one is commercial acumen. First, we'll go through communication. How are you going to get this marks? First, by going by the format. Apply the format correctly. What did they ask? Briefing notes. Are you using this heading? Are you using the subheading? Number 1. Number 2, the language that you are using. What is the tone of your notes? We are using we. We should do this. We should do that. How are you presenting your calculations? Are you presenting your calculations noting note 1, 2, 3 correctly or labeling? Okay. Next mark. You are keeping it very specific rather than general. You are referring to the case study. So 3 marks. Next. You are following the instructions. How? Not checking computations in the schedule. If you are not checking the computations in the schedule, you are making a mistake. You have to go by the computations in the schedule. So that's how you're going to get the communication, by following the correct order, writing proper introduction, heading, subheading, presenting your calculations correctly, labeling it. Okay, analysis and evaluation. Analysis and evaluation is here. You have to analyze a lot of information. You have to take in information from various places for you to determine that error that is made in the schedule prepared in part A. Next, you have to use the information to get the correct calculation. You have to find the total cash available. Next, analysis of information to determine total additional tax payable for either bonus or dividend. Next, use of information to determine inheritance tax treatment of gift of shares in Omnium. How are you using the information on Omnium? You don't know whether it's in trading or investing. You're just writing it. That it could be, if it's in trading, BPR is available. If it's not, if it's in investment, BPR might not be available, like that. Then you are considering other taxes. For example, income tax, NIC, corporation tax. This is your analysis and evaluation. Okay. Skepticism, how you are doing it? You are questioning the activity of Omnium. That is skepticism. Whether BPR will be available or not. For that, you are questioning the activity. That is skepticism. You are showing skepticism skill there. Next, you are also showing that BPR can be withdrawn anytime if shares are no longer owned by Gail at the time of Brett's death. That is also you are showing skepticism skill. Next, commercial acumen. You are relevantly identifying the correct advantages of lifetime gift. Next, relevant tax factor besides inheritance tax. When you're gifting shares, identifying it correctly, you are you are showing your commercial acumen. So that's it for this. My next video, that is, as you can see, question number 2 ZT onwards, will be under my membership. And also you can purchase these videos. This will be recorded videos, all the recorded videos, all my questions, you can purchase it. The details I will discuss with you about the payment, how to pay it and the amount and all, when you email me at actsabi@gmail.com. Thank you.